How we doing, everybody? How are we doing? Today is Saturday, June the 12th, 2021. And I'm just coming to you live from Wassesson Park on the Bloomfield side. Going to be just here for about an hour today for anybody who may be out and about. I know it's a little overcast today, but if you're out and about, want to stop by, you want to talk about real estate investing, I'm going to be available on Saturdays around this time, for the summer months going into the fall, for a short time, just an hour or so. If people, out and have questions, I'd like, people to stop by, ask the questions that they want. Or if you're somewhere and you're catching this on the live, if you have any questions, just try to make myself available to answer the questions. Also going to be talking about real estate notes, note investing. I do a series every Monday night, 7:30, in regards to notes, real estate note investing, buying notes and all that you can do with that particular strategy. So, just going to be doing it on Saturdays as well for a short time, while the weather's nice. Take advantage of the summertime, and hopefully, it doesn't rain too many times, but I'll be available on Saturdays. If I'm not available, in the park here, I'll just come on live each Saturday in the afternoon. So if you have some questions, maybe you thought about it during the week, and you have some time on the weekend, you can ask it. But just here to answer questions in regards to real estate investing. Also, I'm just going to be going through the real estate notes with everything that's going on in the market right now. Real estate notes are going to be an opportunity for people to get involved in investing. You can get involved with not as much money as you might need to, purchase a rental property, or do a fix and flip or something like that. Also, I'll be looking for people that who don't have a lot of money, to maybe pull some people together, pull some resources together, and get them involved in real estate investing. That way, everybody will make a certain percentage, of what gets invested. We'll break all that down at the right time. But if you don't have a lot of money, we can maybe put you with somebody that has just as much, or maybe some more, and get that money working for you. So we're just talking about the real estate note investing right here. Today I'm just gonna kind of go through what a note is, a real estate note, and how you can invest in them. And I'm also going to talk about some of where the inventory comes from. Again, I know that for a lot of people, you may not know about real estate notes and how to invest in them, but want to bring this opportunity to as many people as possible to look into. If you do have a portfolio of real estate, if you are an investor already, I would say look at notes, especially with this time coming up. You can get yourself better deals on properties by buying notes than you can maybe buying just a REO property or something that's listed. Obviously right now the market is very hot, and investors are having to pay more to get these properties, to fix them up, than to obviously resell them. The cost to fix up a home, to rehab a home, has gone up. So if you're a buy and hold investor or a fix and flip investor, notes can be something that will add, that strategy can add to your current portfolio. So we're going to be talking about this whole thing, and hopefully it makes sense for people. So so just to start at the beginning, what is a note? That's where we need to start at. So a note is basically an IOU. It is the terms of you paying back the loan on the property that you purchased. Many people, when they go buy either an investment property or their own residence, usually borrow money from somewhere, from the bank, private investor, private lender, hard money lender, whatever the case may be. And what they come up with is, a sheet of paper. On a sheet of paper, they spell out the terms of that loan and how it's going to be repaid. And that is the note. It is how much needs to be paid in full, how much you need to pay back monthly, the interest rate, and basically how many months or how many years you have to pay it back. And then it also, those are the basic things that are in the note. Then you have what's called the security agreement that goes with the note. So you have something that will spell out what happens in case you do not, or that person does not pay that loan back. And that's the security agreement. A lot of times people, especially in the Northeast, it'll be the security, it'll be a mortgage. Other parts of the country, they have different names of it: deed of trust, trust deed, and there's a few other names out there. But just for what we're talking about, you're going to a note. The IOU goes along with a security agreement. What kind of security agreement just may differ based on where you invest at. So you have the ability, as an investor, as a person, to buy those pieces of paper, those contracts. Also in that security agreement, it spells out, like I said, what happens if the person does not pay. How do you, as the person that lent that money or control that note, how do you recoup your investment? And it's spelled out in the security agreement. A lot of times it is a foreclosure action. That's usually the remedy, so you will get the property back. So that will minimize your risk, because you're going to get this particular asset from this person, and then it's yours, and then you can go and do whatever it is that you want with that asset once you get it back. So that's the purpose of the security agreement. So and you're able to buy these. Like I said, you're able to buy these loans. If there's $100,000 loan out there, you can pay X amount of dollars for that loan, and then now you own it. And then now what you've essentially purchased is a payment stream. You have for however many months that may be left on it. A lot of times it's created at 360 months, which is 30 years. Sometimes in different parts of the country, you'll see 180 months, which is 15 years. You'll see 240 months, which I think is roughly like 20 years. So you'll see anything from 10 years all the way up to 30 years, just depending on what it is that you're buying. But you're buying those payments at whatever particular time. You can buy them right at the beginning when the person hasn't made any payments. So you can buy the whole 360 months, or you can buy 200 months, 100 months, whatever the case may be. But you're buying those monthly payments. And then when you look at how those monthly payments over that time that you're going to collect, if you're going to collect $500 over the next 100 months, how much did you pay for that? And a lot of times you'll find out that, obviously if that person makes all those 100 payments, you're going to make a significant amount of gain on your initial investment. So this is what you're essentially buying, and you can buy them in all types of price ranges. You can buy these all over the country because you're just collecting payments. If you are a landlord You have investment property, you have to think about it a little bit differently, where you're not responsible for the maintenance, the upkeep of the property, fixing things, dealing with tenants. That's not what you're doing, but you're still receiving those monthly payments from that person. That person is going to be responsible for fixing the toilet, fixing the roof, fixing a broken window, or whatever the case may be. So it's a little bit different mindset from being a landlord. They say a lot of times you're a lien lord. There's a lien on the property, and that's what you're buying. You're buying those payments, and that person has to make those payments to you for whatever amount of time. So, that's really the basis of note investing and what you are purchasing. And like I said, there's a lot of reasons why. I did a video, I think earlier this week, in regards to why, and I'll kind of go through some of that, and then I'll talk about the inventory, and then hopefully you'll see, based on the inventory, where the opportunity is now and where it'll be over the next, I would say year or so. There'll always be inventory, but there's getting ready to be, more inventory based on post-COVID, based on what happened during COVID-19, and a lot of forbearance plans, a lot of people unable to pay because they lost their job. So you should be able to see where the opportunity is. And like I said, if you're a landlord or if you're a fix and flipper, you're going to have an opportunity to get better deals by buying the note than waiting for it to be foreclosed on, and then buying it at auction. You're actually going to be jumping the line, so to speak, getting in front of the foreclosure process, so you can get it at a better discount and then be able to fix the property up and flip it or rent it or do whatever it is that you want to do. So that's why I'm trying to bring this to people who may or may not know, but there is going to be an opportunity to get involved. And again, for people who may not have as much money, definitely trying to talk to you and maybe pair your money up with someone else and do a joint type of venture to purchase this, so you can get a good return on your money. So we're going to talk about why real estate notes. One of the reasons, without going into the list here, is just because of what's happened in the market, like I said, with COVID-19, and how things are going to be handled after the pandemic. Right now you have moratoriums, and evictions are on hold. Some of that stuff is starting to unwind, so to speak. So that is probably one of the biggest reasons, is that there's just going to be more opportunity for the second half of this year, going into the fourth quarter of this year and into next year. There's just going to be more opportunity out there to buy some of these notes. So the other things are a low risk with a high yield. A lot of times when you do a low risk investment, you get a low yield or return, and vice versa. A lot of times when you take more risk, you get higher returns. But this will give you low risk with a high yield, again, because if anything goes wrong with these payments that you are buying, your recourse is always the property. So that lowers your overall risk, and depending on how much you pay for a note, you can almost minimize the risk. You can, there's always going to be some risk, but you can get it pretty low and feel pretty secure Obviously, things can happen. Anything can happen when you're investing, but because of the fact that it is secured by the real estate, that gives you that low risk with the high yield. A lot of times you can get these 7%, 8% or more returns annually on your money. And how many investments can get you that type of return and be secured by an asset, by a physical, tangible asset? There's not too many. If there are more, please let me know, and definitely look into that and try to invest in that. So this creates, it can create monthly income as well as wealth. And those are the two things that we all should be looking to do, is to create more passive income. That means income not coming from your job or something that you work at, but while you're sleeping, while you're on vacation, while you're hanging out with your family, you're still making money. And that's what buying these payments can do. And then obviously it can grow your wealth if you're able to get the property. If you take back the property, and there's a way to do that we talked about, then obviously the more properties that you have, the more your wealth will grow. So those are two pretty big reasons on why we like note investing. As I mentioned briefly, you can acquire these notes at a deep discount. Depending on what type of note that you buy, you're always going to buy at a discount. Depending on the note that you buy, you're going to buy at a much deeper discount than another type of note. And that's something that we could get into at another time, but you are going to buy these at a discount. So, and whoever sells it to you, they know that already. They know that if I have $100,000 left on this loan, well, most people that are in the business and who you may purchase from, outside of, let's say, a mom and pop, somebody who may have one or two notes and may not, make a living in the industry or in the note field, they may not know. But most people know that if you have $100,000 left on your loan, nobody's going to give you that $100,000 just to collect $100,000 over. They're not going to do that. They're always going to get somewhat of a discount. Now, there's large banks out there that'll pay up to 97% of that $100,000 loan, the unpaid balance on that loan. They may pay $97,000 or $95,000 for it, depending on the situation, but it's still somewhat of a discount. Like I said, you're going to get certain notes at a steep discount, and then other notes you may pay upwards of 95% of the unpaid balance. But you will do that because that same note that is written at $100,000, the property may be worth $150,000 now. It could be worth $175,000 or more. So protected again if for whatever reason you get that property back. Now you own something that is worth more than what you paid for it. So you essentially don't have, much risk in that, because you know that you can do something with the property to make sure that you recoup your initial investment. So like I said, acquire real estate at deep discounts. Right now, banks they don't foreclose on properties like they once did. It's just not financially good for them to do that. It doesn't make sense for them to foreclose on, like, a lot of these houses right now. What do you have, like a million, somewhere between 1 million to 2 million people who are having problems in their home due to COVID. uh, Banks are not in the real estate business, they are in the loan business. So even though there will be more foreclosures out there, a bulk of this stuff is going to be packaged up. A bulk of the problem assets are going to be packaged up and sold off, and then those will eventually get down to my level, your level, in order to buy them. So we'll get a little bit more into that when we talk about inventory, and where it comes from. But just know that with everything that's going on, the banks really aren't looking to foreclose on 500,000 to 1 million or more people, and now they have all this real estate on their books. So you're going to be able to get these at good discounts. These can be purchased in your retirement account. I think that's another big thing. A lot of people out here who are working, who have 401ks, retirement accounts, and you're not planning on retiring for a number of years, you can use that money to grow your retirement account for when you are ready to retire, because you're buying a number of payments that could last 5, 10, 15, 20 years. Obviously it just depends on how long that person stays in the property, but you know that you have this promise that they're supposed to pay you over this amount of time. And then let's just say within, you buy something and it has 15 years left on it, and the person sells the house after year 4, you're still owed a lump sum of money when they do sell the house. When you go and sell your house, you do have to pay off the existing lien, that first position loan that you got, and then anything over that obviously goes to the homeowner as equity. But you as a note holder have been collecting payments over those 4 years, and then you're still owed a lump sum. So when you take all of those payments plus the lump sum and you look at your initial investment, you will have done very well on that investment at that particular time. Typically that you have done well on that. And then when you do this within your retirement account, then that money is really tax free or tax deferred, just depending on the type of account you have. So and people, because you maybe been working somewhere for a few years, maybe a lot of years, a lot of people have significant amounts of money saved up in that account that right now is just only doing the stock market. A lot of times it's only going into paper assets, and then people have been riding this great wave right now that's been going on, but that is going to change most likely. If you look at the stock market, it has its peaks and its valleys. So that the good run that it's been on, may cease, may slow down. So maybe you could take some of the gains that you did have or did make, and then put them into a retirement account that allows you to invest in notes. You can add that to your portfolio to hedge against maybe some downturn in the market. And you may have more money. You may be thinking that I don't have a lot of money that I've saved up that I can go and do this. So you can definitely use that account to do it. And we do talk about that on Thursday evenings at about 7:30. We talk about how you can use your IRA to invest. If you want to check us out on Thursday evenings at 7:30. In this business, you can also broker a note. If you were able to find someone that had a note on a particular property, you can make yourself a fee income. You could agree to purchase that note at a price and then be able to sell it someone at somewhat of a higher price. You are able to do that within the business. That's what I do. I know people, know companies that are looking to sell these, and then what I do is bring that opportunity to someone that has the money and get them the return that they're looking for, and then there's usually some money to be made in doing that deal, and you can get a fee for doing that. And then the last thing here on why is because there's no landlord responsibilities. Like I mentioned earlier, there's no going after tenants and trying to fix something, having to deal with their phone calls or anything like that. The people own the property in this scenario here, and they're just responsible to make your payment. If something goes wrong in the house, you don't call Bank of America, Wells Fargo, or anything like that. And that's the position that you're stepping into. You're stepping into being the bank. And so that really takes away a lot of the expenses that you have to factor into your cash flow. You don't have to pay the water bill. You don't have to pay the utilities, or the maintenance on the property and vacancy and all of that stuff. You don't have to take that into consideration on a monthly basis, and that will cut into what your cash flow is, whatever that monthly payment is. And then usually there's just a fee for having a servicing company, just making sure that you get the payment on time, and that cost is very minimal. A lot of times it's less than $50 to hire a servicing company, and you really don't have any other expenses when you're the note holder. So now I'm just going to talk about the inventory and like where it comes from, and how does it get down to our level, or a level where we can buy these discounted notes at. The banks originate a lot of loans. Obviously, most people go into their local bank or a lending institution and say, hey, I want a mortgage. You talk to different lenders, different mortgage representatives, and they originate these with the big banks. So what they do, the big banks, they have all of these loans. They have thousands and thousands and thousands of loans because they're doing it throughout the U.S. So, how many loans they have? They probably have in the millions of loans. And what happens is that there's a certain portion of all of those loans that maybe go into default. Somebody doesn't pay. Maybe because of the price point that it is, that the bank just doesn't want to necessarily service that loan or continue to collect payments on that. So what they do is that they pull those together and they sell them off into a secondary type of secondary market to note investment companies, REO bulk buying companies. They will sell millions and millions of dollars worth of loans to these companies. Now, obviously, if you're a note investment company, you're going to need 50, 100 or more millions of dollars to buy these from the big banks and the big lending institutions. So a lot of people obviously can't play in that space. So there are a few companies out there that can do that. And if you go look at the Fannie and Freddie website, you'll see that they have a bulk or pool sales of notes. And then you can see, I think there's one coming up one that it just passed this past weekend, and then there's another one coming up towards the end of the month. Or I think the bids have to be in, either it was last week or towards the end of the month, and then they're going to decide who they're going to sell thousands and thousands of loans to. Now what happens is when those note investment companies or REO companies, when they buy these, they can't go and look at thousands and thousands of properties and figure out everything on them before they buy. They just know that, there's this pool that Fannie and Freddie are selling off and we want to make a bid on. So they just make a bid based on the amount of the unpaid balance of all of these loans and what they can get them for. And so when they get them, not everything that they purchased is going to be something that they want. It's not going to fit everything that they want to do. It's not going to be worth their time a lot of times to deal with, a lot of those loans. We're talking thousands and thousands of loans. So what then they do is that they carve off a lot of stuff, especially in the lower price band, in the lower priced assets, under $150,000 or less, just may not be worth their time. They're looking for the loans that are $400,000, $500,000, $600,000, $1 million. Those ones that they probably want to focus on the higher amount because it's obviously more profitable. You have more, the payments each month coming in are more. And then these other ones that are small ones, they kind of carve those off and then they sell those to smaller, investors, smaller level investors. They sell them off individually as opposed to big pools. I mean, you are able to buy pools from a note investment company or REO company. You are able to do that. But usually they're a lot smaller. You may buy 5 or 10 or something like that, but you don't buy usually hundreds at a time because it's getting down to our level, and the people at our level may not have, $500,000, $1 million to buy, 25, 30 loans. And there are some people out there that can, but I'm just talking about, the lower level people. And you can buy, these individually from these particular companies. So also inventory comes from consumer originated loans. That means more like the mom and pop people. If I have a property that maybe was passed down to me, I inherited, or somebody in my family lived in it a long time and now there's no mortgage on it. What people can do is create a note on that particular property. Instead of selling it outright and getting all the money, sometimes people use this to supplement their income. So they can create a note on a property and, they have started to receive payments, but now they're looking to sell. They'd rather take, $25,000, $30,000, $40,000, $50,000. And that's just an example. It could be less than that. They want that lump sum as opposed to taking that $600, $700, $800 payment a month. It may be worth them to do that, and because they do that, they are able to sell at a discount and still get the lump sum that they are looking for. So we're able to buy them from the individuals that create them. So that's really where the three places that you really get the inventory from. And like I said, what I want people to understand is that now all of these loans that were originated by these big banks and what happened during COVID, they're taking a lot of those people that haven't paid for 12 months, 15 months, whatever the case may be, instead of foreclosing on them when you can foreclose, they're going to pool together a lot of those loans. And right now it's probably somewhere over 1 million of those loans are going to be pulled together and sold off. And like I said, if you go to the Fannie, I think it's Fannie Mae has a sale coming up soon. So that inventory going into the rest of the year eventually is going to get down to our level and have the ability to buy. Now, you are going to be buying a quote-unquote problem, but that doesn't mean that you can't fix the problem. You can't assist this person getting back on track to make payments. And if worst case scenario, if they don't, you still get the property. So again, you're either going to get this person back on track, or you're going to get the property, and then once you get the property, there's a number of things that you can do. So that's where the opportunity lies now and in the future, really because of what happened in COVID. So that's why we really want, people to understand this time and take advantage of it. And you should have taken advantage of it. Me personally, back in 2007, 2008, would have been a great time because everything was on sale. Everything was very cheap. And you could have got a lot of great deals. Now, it's not going to be as bad as 2007, 2008, and thereafter. But there is going to be some opportunity for people to be able to, buy these properties, help homeowners out, start to receive monthly cash flow, and build wealth moving forward. Anytime we do have things that happen like COVID-19, there will be opportunities as well. And this is one of the opportunities, like I said, because these banks are going to pull a lot of these loans together, sell them off to a secondary marketplace. We're going to buy a bunch of them, and then they're going to get down to our level here. And then there's also opportunity to market to people who have created these notes themselves. And if you want to do that, we can discuss how that gets done. We send out some marketing information. People call us back. We try to talk to them about their situation, see what they want for their note. And that's happening too because people may be getting prepared for the opportunity that's coming. So you do have people that own several notes. Maybe they are investors, and they say, hey, I want to start to get some cash now because of what's getting ready to happen. I want to prepare myself to buy some of this new inventory that's coming out. So maybe I've owned some of these properties, some of these loans, I should say, not properties, but I've been owning these notes since 2008, 2009, 2010, and now I can look to sell them off because I've collected payments all over this time, and now I can maybe recapitalize so I can take advantage of this new opportunity. So you're seeing that as well, and you just can take advantage of that opportunity as well as people who have notes and created them themselves, the mom and pops, the individuals. They may have financial issues during this particular time, and they could use a lump sum of money. So if we can get out here and market to them and have them call us, maybe we can buy some of those direct. So those are the things that I really wanted to cover today. Just why and what a note is, and where the inventory is, and where the opportunity lies now and going into the rest of this year and 2022. And I'm really looking to partner with people, talk to people about how we can get involved in this space and take advantage of this opportunity. So if you do watch this at another time, I'm going to be available on Saturdays between 1 and 2. It looks like I'm going to do probably 12:30 to 1. Between 12:30 and 2 o'clock, I'll be somewhere in this local Essex County area. If you want to come and talk in person, I'll make myself available for that. But I also cover this Monday night, 7:30. We kind of go through the industry. So I'll cover something this Monday that I will recover. I'll cover again on Saturday if you aren't able to make the live video. I usually go live on Facebook and Instagram on Monday nights, but for whatever reason, if you don't see that and you maybe have some time on the weekend, I'll make myself available in the daytime if somebody has questions, wants to meet and talk, weather permitting. If you still want to meet on the weekends, we'll still be able to do it. I can maybe come, or maybe we can agree to meet somewhere if it if the weather's not permitting. But I like to be outside, like to enjoy, nice weather and everything. So, I'll try to, be outside as much as possible. And, but we can still have these conversations and talk about what it is that you want to do in regards to this, and how you can take advantage of the opportunity, how we can potentially work together. So, going to be doing that from now until, obviously the weather breaks sometimes probably in September, October. And then after that, there'll probably be more inside meetings, as we go into the winter. But like I said, I think this is a real opportunity. I don't know how many other people are talking about this side of it, but anything that you do on the note side of the business, you can do on the traditional real estate side. You can still do fix and flips by buying notes. You can still be a landlord if you like being a landlord and that's what you want to do. You can definitely do that by purchasing the note. You're able. There's ways that you can buy certain notes that that you can eventually be the landlord on that particular property. And we'll talk about that probably next week. On Monday, I'll get into the different types of notes that you can buy. And then you'll start to see, or if I buy this type of note, I know that I can get this particular property and be a landlord if I want. Or I can do this and do a fix and flip on it. And again, you can do this all over the country. There are ways. We have a lot of outsourcing that we can do to help you do a fix and flip in another state. People are doing fix and flip virtually now. You do not have to just fix and flip in your own backyard. We have people in different areas that we trust and can manage fix and flips in other parts of the country. So don't let that stop you. But if you just feel more comfortable doing things, in your own backyard, there's an ability to do that. But you don't have to limit yourself to that. So, but we'll kind of talk about that as we continue this series. And we're just here, like I said, to answer questions. If there's things that I need to know about that maybe I'm not covering or something like that, please let me know. And we'll look into that. But we just want to, be an asset to people, be an asset to people who are already investing. New people coming in, like I said, I'm really looking for the new people because, the wealth gap obviously is a really big issue, and you can build wealth through real estate and through notes. A lot of times people that don't have or make as much money can get into this and start to gain some momentum, and then down the line be able to maybe do some of those bigger transactions and things of that nature. But you can start here, collecting these payments. Some of these things will get paid off. You'll get lump sums, and then you can just start to build momentum from there to do some other things. But don't think that because I'm a per hour worker or I make less than X amount of dollars that I can't do something. We can help leverage you and leverage your money to get you involved, and then you'll start to see, okay, on this amount of money I was able to make X amount over this first year, and now you can take those gains, and then maybe after you do that, you can take those gains and then buy your own. On your own, you can buy your own note and not have to leverage with someone else, and then you just create momentum that way. So we want to show people that we want to help those people that don't think that they can get involved, and you have to make so much money to be involved. You don't, you really don't. It's just all about putting you together with someone who may, probably has some more money, but can help you leverage your money to obviously grow it faster and, again, more securely, because you will have the property. You will have an interest in the property if you do have to take it back or anything like that. So your investment is protected. So, that's it for today. I usually during the week We usually go about, we try to go about 20 minutes on our Mondays and Thursdays, 20 minutes to a half an hour. I'm probably going to, stretch it out a little bit more on this weekend thing, just to get into a little bit more detail on things. But, obviously during the week, we don't want to try and, teach a whole seminar each and every night. People are working, you got families and stuff like that. So we try to give you just enough information that, spend a little bit of time, talking to you. And then we'll use this time on the weekends to go a little bit more in depth into, like I said, if you have questions, you'll be able to find me here live, or if you want to come and meet in person, let's do it in a nice park. I'm offering to buy lunch to the first 3 people that RSVP, or if you text "I'm coming" to 973-475-8488. The first 3 people that I get that text from, I will pay for their lunch, and we can sit here and just talk and see. I want people to tell me why this wouldn't be a good investment. Come tell me why it's not, why you wouldn't want to do it. I want to know those things, because like I said, even if you are investing in whatever it is that you're investing, I think that this should be added to your investment strategy, especially because of what is transpiring in the market and where things are going. A lot of my videos on YouTube, you can go to Abundant Capital Group YouTube channel. You'll hear me talking about the affordability issue, and there's a big issue with that. And a lot of these notes that are going to be coming are in the affordable housing space, and we're going to need people to help people stay in affordable housing. If you follow this administration, they've been talking a lot about affordable housing. You look at some of the things that HUD is doing. They're trying to, give money to people so they can stay in their homes and not get evicted and things of that nature. But affordable housing is going to be a key. And if you can be someone that, buys these notes and these affordable housing and can rework the numbers and get people, if they were paying $700 and now you can get them down to $500, and get them back on track, that's just going to help everybody. That's just going to, just help out a lot of people. And that's what we want to do. We want to, try and help as many people as possible. And there's going to be an opportunity, especially, like I said, in this affordable housing space. So, it's been about 50 minutes that I've been on here. So, this is the first time. So, there's going to be, I'm going to do this on a weekly basis. So, look for me. If you watch the replay of this, please, if you have a question or a comment, just let me know, and we'll get that answer for you. But, hopefully you have a little bit more time to watch this video as opposed to during the week. Maybe, on a Saturday or Sunday, you don't, things slow down for you. This one goes a little bit longer. And we try to leave it open for questions as well. So, but let's see here. I'll give you a little bit of the park here. Let me flip this. Yeah, flip. So there's a little playground right there. And they're over there playing cricket. They have a pretty good league here that meets on the weekends. But as you can see, this park is pretty big. Got a bocce ball. That's where they play bocce ball. I think they play on Sundays. So that's my little setup right there. And that's the entrance. So, that's what we're doing. It's called Park Your Money. Hopefully you get the pun on that I'm playing on in terms of the park and, ways to invest your money. That might be kind of corny, but, that's what this series is going to be called, Park Your Money. Meet in a park and just talk about different ways that you can invest in real estate note investing. If you want to do some other things, like I said, buy and hold, fix and flip, you can still do that with notes, and then you can expand where you do it at. You can go into a lot of different markets, get things at a lot cheaper prices than just in New Jersey and New York area. So I should have taken advantage of this opportunity like 10 years ago. But you live and you learn, and it's coming back for a reason. So I'm not going to miss the second wave, and I want as many people to come along with me, and let's try and build our wealth, together. That's my goal, is to help people, build their wealth for them and their families. So, all right, everybody, it's been just about, like I said, about 1 hour. So I showed you the park, and I know you're probably tired of looking at me. One more time with the park. It's a little overcast today, but as long as it's not raining, it's all, that's a good thing. So, but I will see everybody next Saturday. If you want to come in person, like I said, you can text me 973-475-8488 and just say I'm coming. First 3 texts I get, I'll give you a call, let me know what you want for lunch, and I will pay for the lunch. Come and, with your questions. And then Monday night, 7:30, we do a shorter version, just covering this again, piece by piece. So tune in to Facebook Live as well as Instagram Live at Abundant Capital Group on Facebook and Instagram. We'll cover another part of this, a little bit shorter version of it. Thursdays at 7:30, we're also on, and we're trying to help people use their IRA. You have to use your IRA. It's a really great way to grow your retirement account faster, more securely. Just don't have it all in the stock market. Be a little bit more diversified. Obviously real estate, you can see, most millionaires and billionaires have a bunch of real estate, and this is one way that you can invest in real estate with, maybe less money. So we do that on Thursdays at 7:30. Try to join us for that, and then we're back here on Saturday afternoon, 12:30, 1 o'clock, and we'll go to about 2. If you want to, like I said, come out in person or just jump on live with me. But we'll go a little bit longer about a topic that we discussed earlier in the week. All right, everybody, have a good one. Stay safe, and we will see you soon.